Welcome to a special edition of Ticky, and before anything else, let's cross live to our senior business reporter, Leo Shanahan, who's been in the lockup and has all the analysis for us. Leo, quite a thing to get through, but what is the most important takeout from your point of view?
Look, Ticky, I think ultimately the banks will not be too concerned about this report. Obviously, there are people whose, for example, the Chief Executive of NAB and Chairman, Mr Thorber and Mr Henry, there are referrals. There's about 22 referrals to ASIC and APRA that could contain, I understand, criminal referrals from a range of financial institutions. That's NAB, that's AMP, but a series of other ones, Suncorp, some of the insurers, but ultimately...
But any individuals, Leo?
Specifically... No, it doesn't specifically name individuals, Ticky, and I think that's a massive sigh of relief for some individuals, obviously, who thought they could have been involved. But ultimately, it doesn't take an axe to things like vertical integration. It doesn't recommend anything around banks, perhaps, and financial institutions they're not already doing. That is selling off large parts of their business to get rid of the conflicts. I think the ones that will hurt the most and that haven't gone that far is in mortgage broking, where there are recommendations about the abolition of trailing commissions, where a lot of mortgage brokers make their money. There's some 25,000 odd people employed in mortgage broking in Australia, so it does recommend those changes taper off, but after 3 years it does recommend that they get rid of trailing commissions. Now, interestingly, you say that the government has said it will act on 76 of those recommendations, but it hasn't fully endorsed them, and one of them does relate to trailing commissions. It disagrees that abolition should take place in the next 3 years. It wants to wait, have a look after 3 years, and then see, because it says that would be a free kick to the big four banks if you get rid of that model as it stands for trailing mortgage brokers. Whilst it's happy to get rid of trailing commissions, it doesn't want to get rid of all commissions in mortgage broking because it thinks it will be too beneficial to the banks. But overall, look, you've got a lot more on financial advisors being targeted, conflicts there. Once again, although a lot of that work had been done, crackdowns on commissions, no hawking. That will hurt insurance, I think, is another one as a structural part of the industry that will hurt. But overall,
this is when you go into a bank.
Bounce in the banks.
Yeah, this is when you go into a bank and you ask for one service and you get flogged a couple of others.
Exactly, and specifically relating to insurance and superannuation products, I think the final report was very concerned about some of that behaviour, and it's basically said no hawking as it relates to a range of products, but in superannuation, and particularly concerned about insurance and the way in which financial planners make money off insurance. That'll be another big kick in the guts to financial planners, because it's recommended zero commissions on insurance, life insurance sales going forward as well.
Yeah. Leo, looking at the regulators, because there was some expectation that the regulators would come in for criticism and recommendations. Now, ASIC and APRA are still going to exist. BEAR, the executive accountability legislation, that stays with APRA, but what other changes are on the way there?
Well, look, among others, it's recommended a new oversight body for ASIC and APRA. That is a regulator's regulator, if you will. Now, the extent to which that will be efficient, I suppose time will tell. The government said it will adopt that recommendation. It's basically also said that ASIC needs to work from a premise of going to court. Or in the very least, getting statements of, I suppose, wrongdoing out of companies when you have enforceable undertakings. No more of this, oh, well, we've got an enforceable undertaking, but we didn't do anything wrong.
Leo, I'm going to interrupt you there, and we'll take you to Anna Bligh, head of the ABA, whose voice, she's been in the lockup on behalf of the banks.
Experiences to the Commission. It is their courage that underpins today's report. This Royal Commission has put the entire banking sector under the microscope, and its final report lays bare how banks have too often failed their customers and let down the Australian people. Banks understand that these failures have caused deep hurt, suffering and heartache for far too many customers, and they are sorry for the pain that they have caused. Importantly, banks accept full responsibility for these failings, and they know that they must now change to ensure that this never happens again. Banks are determined to learn the lessons, to fix the problems and to make it right. Australians expect better from their banks, and more than that, they deserve better. Today's report contains some very tough medicine for banks, including potential court cases. With 76 recommendations, it represents a huge overhaul and top-to-bottom reform of banking and finance in this country. It will make changes to what financial services and products can be offered, how staff are paid, what sort of penalties there'll be for wrongdoing. There'll be new offences for a range of activities and, importantly, new rights for customers. The industry is determined to get on with the job of fixing the problem. To that end, it has already formed a special task force to begin the work that will be needed to get this job done. The industry sees this report as a roadmap. It is a roadmap to drive the change that is needed to earn back the trust of the Australian people. Today is an opportunity for banks to reset their relationship with their customers and with the Australian people, and banks are determined not to miss that opportunity. I can understand in the circumstances that many people may be cynical about whether banks will change. To those people, I would say, don't judge banks by their words, judge them by their actions in the coming weeks, the coming months, as they implement this report.
No individuals were named for specific criminal proceedings, and many have seen this as not as harsh as expected. Have the banks gotten away with this in this final report?
There are a substantial number of referrals by the Commissioner to the appropriate authorities for matters which the Commissioner believes there's evidence that requires the attention of those authorities potentially for some form of action. So I think if you go and have a look at all of the matters that have been referred by the Commissioner to the relevant authorities, you'll see that he hasn't pulled any punches here.
And why has it taken a royal commission for the banks to acknowledge they've been treating their clients exceptionally poorly and to promise to change their behaviour?
I think one of the things that a Royal Commission brings to whichever area that it turns its attention is a great deal of sunlight, and sunlight has always proven to be the best disinfectant. It's when an industry or an area of activity sees its own behaviour through the lens of somebody else, in this case a Royal Commission, and through that Royal Commission the eyes of the public, that it really starts to understand how behaviour that seemed quite normal and industry practice is in fact anything but.
Can you just talk a little bit about the banking code, because obviously Hayne's recommendations called out some inadequacies there and some changes that he would like to see there. The government has said they would urge the ADA to take on those changes. So, I mean, what's your response to that today?
The banking industry welcomes Commissioner Hayne's recommendations in relation to the banking code of practice. He has recommended a number of things, including that some parts of the code and indeed other industry codes in other parts of the sector should have some provisions that are enforceable. The banking industry welcomes that. We have always regarded the code as enforceable, and if it's enshrined, if those appropriate parts are enshrined in law, that will put beyond any doubt the rights of customers and their entitlements.
So you intend to
yes.
move forward on all of those?
Yep.
Can banks be as profitable under this new regime?
I've always believed that it's a false dichotomy to believe that treating customers well and treating the customer as well as you possibly can somehow comes at the expense of shareholders and their interests. I think in any business, whether it's banking or any other business, the better you treat your customer, the more you are likely to succeed, to grow, to make a profit and return something to your shareholders.
Leaders are very keen to sort of see that banks keep lending. Are we facing any risk of a greater credit squeeze in the wake of this report?
Banks were very concerned that there may be recommendations that would see lending practice tighten up and therefore perhaps put pressure on the flow of credit into the economy. That is the one area where the Commissioner has recommended that There doesn't need to be further action, and so I think that's very, very important. There is no doubt that you've got to get the balance right between looking after customers, making sure you don't lend them money they can't afford, but not being so tight that you end up restricting credit into households and into small business and into the economy generally. So I think the Commission has found the right balance in that regard.
Does the ABA?
I could almost say I'm rather relieved, Anna Bligh there. I think the banks have come out of this better than some thought. Let's bring Leo Shanahan back in for a final comment. Leo, just wanted to ask you about AMP, because there was some thought that the Royal Commission would recommend a clean break between this nexus of financial planning and manufactured product. It would have blown up business models. That hasn't happened.
Yeah. No, it hasn't. And look, they haven't escaped. They certainly haven't escaped censure. I mean, they have been recommended, they have been referred to either ASIC or APRA over a couple of instances in both superannuation and wealth management, and of course they face that investigation of fees for no service. So there does, to my mind, remain the live possibility of criminal charges as an organisation or individuals involved. But yes, broadly speaking, they have, as the other institutions have, dodged the axe being taken to vertical integration. Now, that being said, as well aware, there's been so much of those sell-offs of those parts of businesses that have vertical integration at major banks, so large parts of insurance, wealth management and others.
Yes.
AMP, of course, as you rightly point out, hasn't done that, although it has sold off parts of insurance. So there's probably a degree to which banks have already done this themselves. AMP perhaps holding out to some degree, but yeah, it'd be interesting to see what David Murray's response is to this.
Well, it will indeed. Leo Shanahan, we're out of time, but stick around for Your Money Live, coming up right after the break with more analysis. Thanks.